Hello and welcome to the Texology. I am Priyanshu Goyal and this audio episode is part of my podcast series, The Texology, which aims at imparting information on crucial concepts of the Indian taxation scenario. If you prefer to listen in Hindi, you can watch my videos on YouTube and Instagram. You can find my profile by the name CA Priyanshu Goyal. As with other episodes in this series, this is going to be a very short clip to convey only relevant matters. Before we begin with today's content, I would just like to mention that if you feel like connecting with me, I'm available on Instagram, LinkedIn and Twitter by the name CA Priyanshu Goyal. In this episode, we are going to discuss one important provision of Income Tax Act which mandates that certain businesses shall provide facility for accepting payments through prescribed electronic modes, which was introduced in order to achieve the mission of the government to move towards a less cash economy, to reduce generation and circulation of black money and to promote digital economy. So here we are talking about Section 269 SEO, which was introduced by Finance Act 2019 with effect from 1st of November 2019. Section provides that if any person who is carrying on the business has a turnover exceeding Rs 50 crores in last year, then he shall provide facility for accepting payment through certain prescribed electronic modes in addition to other electronic modes even if already being provided. These prescribed electronic modes, as mentioned in Rule 119AA, are debit card powered by RuPay, Bhim UPI and Bhim UPI QR code. So the liable person who gets covered under this section needs to provide these three electronic modes of payment in addition to any other electronic mode being provided by him. Further, via Circular Number 12 by 2020 dated 20th May 2020, it was clarified that the provisions of Section 269 SU of the Act shall not be applicable to a specified person having only B2B transactions, that is, no transaction with retail customers or consumers, if at least 95% of aggregate of all amounts received during the previous year, including amount received for sales, turnover or gross receipts, are by any mode other than cash. In order to ensure compliance, a penal provision of Section 271DB was inserted, which provided a penalty of Rs 5,000 per day during which the failure continues, with the proviso that no such penalty shall be imposable if such person proves that there were good and sufficient reasons for such failure. So that's all for this clip. I hope you'll find this useful, and if there's any related query or question about this, feel free to reach out to me on info@priyanshugoyal.com.